Good evening. I'm worn out. I'm Ira Epstein here with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening of Thursday, the 14th of December, 2023. I would not know it's December 14th in Chicago. 51 degrees today, going to be in the 50s again tomorrow. Normally we're shoveling. I don't know how to say this any other way. We'll get it, I'm sure, but El Nino effect, it's showing itself, and it's all over the city. That's all you're hearing is, wow, what a gorgeous time. The streets are bustling, the stores are busy. It's really something to see in the city. I'm quite amazed by it. The market's been amazing, right? Wow. All right. Get ready. There should be some profit taking here. You got a weekend. Some traders are going to leave. They're going to leave for Christmas by midweek and go see family and things like that. And then we come back for a few days for the new year. And then we get back to real business. So next week is one of those funny weeks. It's a transition week. Most of the week will be normal trading. And then you come down by Friday, people are gone, including me. I'll be going out of town for the weekend. But out of town for me is right around the corner, and then I'm back. So sometimes I come back that night. It depends. It's easy. Before I get too far, I decided today to do another special report. And I want to do on this one something that's going to affect all of us and affect the marketplace in a major, major manner. So what did I do it on? I went and I did it on the dollar index. And the reason is the impact that the Fed is going to have on this market right now. Remember what the Fed's done. It has done its pivot. The Fed, unlike the European Central Bank today, the Bank of England, or the Swiss National Bank, no. They're all still in a hold mode looking to join. Well, they didn't react on the way up when the U.S. Fed did. Remember COVID? Remember when we went into the tightening eventually to fight the inflation that it all caused? I bring you back with that. So how I did the report, I start you off in this report with the Moore Research Center seasonal charts of the index. No specific month. I didn't use the futures for the month. I wanted to use the index per se. Then I show you the 30, the 15, and the 5-year. And then I strip the 15 and the 30 away. Why? Because I want to deal with the impact of COVID, which has been a 3-year event, right? And we know that it created supply chain problems. We're no longer doing business the way we did with China. We certainly don't want to rely on them for anything. We've seen diversification. We saw that the Fed had a race to stop inflation by tightening. And now that they've done it, now that the supply chains are more back to normal, and now that you're not even going for your vaccines. What about Pfizer? You watching it go into the toilet? It's a one-trick pony for all purposes. Their COVID isn't making their vaccine the way it was. People, number one, are treating this the way it came out when it first happened. I said, you watch. It's going to be treated like a flu vaccine at the end of the day. And I said this maybe 3 years ago. And I looked at it and I just said, I read about the Spanish flu. I looked at all that and I said, if they had a medicine, that's what it would be. Well, now many of us get our shot, others don't. Remember, the vaccine will not stop you from getting COVID. A flu shot will not stop you from getting the flu. It's the degree of it, if you catch it, that it moderates, period. And that argument was going on with how many of you for how long? I can't believe people get so stubborn in the head. I'm not getting it. And I had friends that took it and they still got it. They got it in a less way, and they're probably still alive if they had the shot. Okay, so I went into that. Then I decided, okay, why don't we look at ideas on the longer-term chart, the weekly charts, and we rip those apart. And then we go to the daily charts. So I've got the seasonals. And then, by the way, I finish up with price counts. Price counts are unique to the Linn Group. We're the only firm I know that has this. They won't sell the formula, so you're not going to be able to use it, but we teach you how to use it on our charting software called QT. And if you use it, and if you've ever gotten used to this, you become addicted. Because one of the problems you have and I have is how low or how high is the market going to go, and what are the probabilities of it reaching different plateaus. What a price count is once a trend sets in, did you hear what I said? Once a trend sets in, it gives you an idea of where it's going in different layers, up to 5 of them. It's rare you ever get to a 5th. You'll hit a first very often. Then it drops away for the second, a little more for the third, and getting to a 4th is even rare. But you have to know these because you get vertical moves in the marketplace all the time, and it's a timing area. It's a zone area. Where do you come out of the market? Where do you say, I've grabbed more than the lion's share, I'm content, and then hoping reaction set in whatever the new game is. How do you get this? It's on our website, iraepstein.com, under the word research. You can move your cursor up here and you can get to it. And it's only on through Monday. So if you want to see it, it's now. I did it intentionally today so you can get the weekend. I get people always, Ira, can I go back and see your report? No. It's there for you to look at now, and I'll talk about it all the way through. Okay, is that fair enough? But that's where we're going to keep this. So today was a day, and what you're seeing is rotation. It's very important. Are the Mag 7 stocks moving? No, not at all. In fact, some of them are dropping right here. Microsoft is a good example, down $8 today. Meta, not up right now. So I can go on with this and show you that there's a rotation in the market. And what we don't want is 7 stocks completely taking over the fortunes of our stock market. That's the worst thing you could have. Are we getting ahead of ourselves in some of the indices? We most certainly are. Look at how QQQ doesn't want to participate with the market right now. Where you do have good things, TLT. You know I've been looking for Amazon. Not yet. I want closer to where all the sales, everybody gets nervous over next week, then they start buying, and then we see the numbers coming in for the first quarter. That's what I want to basically see with all that. AMC, you know what I think, $7 is maybe a pivot number. So, McDonald's, I read a scathing, terrible review, national news, people that went, there's an app, I think The Guardian, have you ever heard of that, was carrying the article. And it was phenomenal. And it rips this because people have lined up for 2 hours to go here. Remember, if you go to one of their cosmics, as they call it, it's about drinks and a few items, a cookie, a different sandwich, no French fries, no burgers, none of the typical stuff. So think of it as a fancy drive-through, not even bathrooms, as I understand it. And the review was unbelievable, how vile all the drinks basically were. And I would expect that. It's not what people ordered. It's brand new, folks. McDonald's is big. You think that they don't read this? You think that they're not testing it and so on? I think their ideas are a direct threat, and I've said this to Starbucks and to Dunkin' Donuts. It does not mean it'll work. I don't care if they're McDonald's. Those other companies are not small. They know their market, and they are fine-tuned. Who doesn't want Dunkin' Donuts coffee? Who doesn't drink a Starbucks? I mean, think of what I'm saying. So McDonald's has its own problems for it. Are you going to give up your Red Bull for whatever they're coming up with, or your smoothie at your favorite fresh fruit smoothie place for a McDonald's? I don't know. But I enjoyed hearing first the negative comment because it just opened. I read the positive one, so now I'm hearing the other side of it. And you can see how the market sold off. I think other people read the same thing. I'm laughing because that's what you would expect. The trend is still up, as you can see all the way through. But when you get to a Bollinger Band, which you did yesterday, what are you supposed to do when you hit a Bollinger Band? You hadn't hit a Bollinger Band. Early November was about it. You come back. What are you supposed to do if you've taken my course, the Enhanced Bollinger Band course? You're supposed to take some money off the table. And that's what happened here. And you're about to, I'll bet you lose it tomorrow, the embedded reading. All right? And if you lose it, you could be headed back to the 285 level before the store opened. So you got your bump coming back, and now it's got to prove that it's viable. There's only one store. They're building 10 more. But I think in Texas and primarily, we'll see if they work. They picked Chicago. Remember, the first McDonald's was Chicago in Des Plaines, Illinois. So Bolingbrook, another first, and we'll see how this all works. Rivian, this morning, did you hear my comments in the morning update? I want to congratulate Tesla on something that nobody's giving them credit for. They recalled 2 million cars, and you're going to say, what are you congratulating them for? You own a GM, you own a Ford, you own a Stellantis, Volvo, I don't care what it is. Normally you get a paper, in the postcard, got to call your dealership, there's a recall on your car, make an appointment, go fix it. Well, 2 million cars being recalled by Tesla, where are you going to take them? Because I don't even know if they have a service station, all right? They have delivery points, and they have a spot where they prep the car when you pick it up, but I don't know where the repair places are, and I live in Chicago. It's pretty big, and there's a lot of Teslas here. You know how the recall works on this? Over the air. Come on. You make one fix, you blast it to 2 million cars, and you've done a fix. Just think of the money they're saving because they're notifying people with emails. Last I looked at it, you buy a server, you pay for your bandwidth, you send it out. Do I have postage involved? No. In the car, you probably get also a warning that there's an update waiting for you. It's proving how far ahead it is, and it's not being lost on the other automakers that are looking at that. It is a monster cost saver. Now, there's negatives to these cars. Do you know how much more copper you use in an electric car than an internal combustion? I'm talking the whole car. 3 times the amount. Interesting, right? Okay. In UGA, well, we ended something big time. We ended the recent decline. That doesn't mean you have to go back to a bull trend. But once you took out the high right here, whoops, let me come back there, my mistake, I apologize. Once we did this, take a look. Ended the decline, market comes up. What's the neutral number that I teach you every time we talk on charts? It's normally the markets go back to the 18-day average of closes to fight a battle again. I cannot chase the financial sector over a Bollinger Band and never will. It is embedded. It lost it. It re-embedded. It went up. It did just what it should. It'll pull back. We'll have opportunities. XLI, the industrial sector, embedded over the band. It's running against the band. This is the first move over it. It can just settle back on it. It's not like it's 4 or 5 days over it in a row. AMC, have I nailed it? I said the $7 is going to be your pivot for a while here, and it's narrowing in and doing just what I wanted it to do. I guessed right on that one. RSPD, so the consumer who's dead, yeah. Did you see the retail sales today? They're looking for a decline of 0.1%. They got an increase of 0.3%. Just the opposite. So the consumer is out there buying like there's no tomorrow on everything, all right? We'll see what the average sales are, where they're at, but you're going to see that the holiday sales, they guessed it wrong, and it's going to be, I believe, stronger than people thought, okay? That's where I'm coming from. On the home builders, would I ever tell you to buy over this? Absolutely not. There's no chance that I would do that. I can tell you that I have had my subscribers there, and today I was telling them you got to take some money off the table, okay? And bingo. I have been very bullish. Remember, I used to speculate in homes a lot. I would go in. I was one of the first guys in Chicago. I'm going back, got to be in the 70s, when they started doing condos, and I would make money in the futures sometimes. And I'd go out and buy a condo with a buddy. We'd partner up and buy another one. Before you know, we had an interesting amount of condos. And we didn't know what we were doing, but we figured, hey, we can rent them out. And we did. And they started paying. And I always believed in real estate and still do. But we went through periods where interest rates got high and not high. There's always a way a seller or a builder of a new building, and that's what we were dealing with sometimes, comes up with something clever. Well, now they don't have to, because that cleverness costs them money, by the way. But they make enough money to keep their business going, and then it flips because they always have an order book ready to go. These guys, do you know what mortgages have done? Remember, they were just up to what, 8.02? They're 6.95 at the close of business today on a 30-year, the average from Freddie Mac. Wow, you fell a percentage point. Now, what you're going to tell me is, oh, it's going to bring a flood of housing out there, and it will. Homes are going to come out on the market in the spring, no question about it, but so will the buyers. Are we going to get back to bidding wars? Because there's a certain element of people that own mortgages now at 4% and under. They're not going anywhere. They don't need to come in and pay near 7%. But it gets enough people that want to buy that a seller that's been thinking, well, can I let go of my home now? Is now the right time for me? He puts it out in the right area. He might end up with another bidding war come the spring. I know I'm the only one saying that. I haven't read it anywhere, but I think that could happen. In XLE, the energy sector, you ended the bear swing. Let me show you what I mean again. So we come here, and you had been with the lower highs, lower lows, not over, you were oversold, not embedded. But if you take out this high, right where the arrow is, watch out, because what that does, you end that swing down and you go right back to these moving averages. It's exactly what occurred today. The IEA came out today with bearish numbers for the first quarter of the year. I thought the market would stay down on those numbers. I was wrong. In the gold market, I think gold's had its correction and now it's going to coil for the next move. In gold, what's happened? You took away the headwind and now it's got a tailwind. What's the tailwind? The dollar. Why? Again, move your cursor up here or go to iraepstein.com to the research and you'll see why. SLV, you didn't bottom out against the Bollinger Band oversold? Come on. I mean, it's exactly what I teach you in the different courses we have. And in the copper, I don't know what got in the copper. That's just honesty. I don't have the slightest idea. I'm looking at this in amazement, and I looked at what it did in the futures, and I went, I don't get it. I don't see why it rallied off this news other than the dollar got cheaper. I know that there's some problems and people are wondering, hey, if the world economies are going to get better, copper will be in short supply. The problem is, my friends, that the European Central Bank, the Bank of England, Swiss National Bank did not lower rates, and Norway's bank actually went up 0.25 point today. Europe's at a different place. America's not strong enough to kick that like that. We're not at that point just yet. Interesting. That's all. I don't care about the fundamentals. I care about the chart. What did I also tell you in the past? Take the name of the chart off. I do this because we're here. Trade the pattern. All right. Higher lows, higher highs. You're over for the first time the 200-day average in the Bollinger Band. Do you think the market is excessive right now? I know what Ira thinks. Absolutely. That excessive doesn't mean you're going short. It's the time that you're cutting down longs if you're in the market. In the dollar, I refuse to discuss it. It's in my report for you. Now, FXE. Lower low, higher high, maybe you get up here. So why is it rallying? Because the U.S. is embarking on lowering rates. They're holding them tight. They don't want to raise them. They're looking for reasons to lower, but they're going to be well behind the dollar. They're not going to be the leader. A week ago, I thought, 1 week ago, that the European Central Bank was going to go in March and the U.S. would go maybe May or June. That's how fast everything has changed, all because of what's going on. So you got to be, I wrote my commentary for my written report tonight, and I said you got to be on your toes. You got to bring out your shoe dancing equipment, your tap dancing shoes or whatever you go dancing in. And you got to be nimble in these markets right now because it's a combination of holiday market. It's a combination of a change of a pivot. It's exciting times. So do yourself a favor, go to the website, take a look at the dollar index report. I think you'll find it fascinating. I'm Epstein. I'll catch up with you all in the morning flash update. Have a good evening.